This week, we did not take a new trade, but we still got paid. The official entry price did not trigger on the new swing that we found this week. However, trail stopping Tesla into its resistance level, I'll show you on the chart, as well as Apple trail stop into new all-time highs that it hit today. But being that my contracts did expire, I did close out. We have the Qs as well as the SPY made their all-time highs yesterday, with today a slight pullback from those highs. Welcome back to Finesse Fridays. This is where I'll break down all of our swing trade setups for the week, not only the execution, but the discipline and the consistency behind them all. Well, no new trades were entered this week. Did not trigger. However, we are still eating off of the winning positions from the 6th as well as the 5th. I'm talking about Apple, I'm talking about Tesla, and I'll go into the thought process of trail stops and selling at comfortable levels. I found that going into this new week, there's a lot of chasing opportunities that already occurred, and I did not want to position us to be inside of something that was necessarily a chase. It was more managing existing positions and ultimately trying to find something that has yet to move. Well, since no trigger, we look forward to the upcoming week, but I'll break down the Apple as well as the Tesla charts. Quickly look at Qualcomm. Qualcomm, as you can recall, was featured for 2 weeks back to back. And being that this is a new week, on Monday, price did accelerate. And if anyone knows anything about candlesticks, this is a strong indication that sellers came in and they came in with force. Since that occurred, well, we understand the result. We always have to remember that taking profits is a part of the process and no need to be too greedy. We have to pay attention to our candlesticks. While I know for the most part, a lot of us last week on Friday did exit this position. Now let's get into Tesla in the resistance level in which we sold that earlier this week. As we looking into Tesla, I want you to notice that Thursday and Wednesday's candle all in the midst of the range for this week. Price had lots of issues to move above this particular area. When you want to find levels in particular, always remember to look left. As I use my crosshair, and if I place it right here, you can ultimately see where this lined up perfectly with a prior resistance level. Just understanding levels, supply, demand zone will go a very long way. Now let's get into Apple. Apple, new high today. It's very hard when it comes to exit strategies for stocks that are making all-time highs. Trend is still very strong, even based off of today's candle, not really much of an indication that buyers are done or that sellers completely took over. It's just for me personally, I do a lot of short dated option contracts only because I know my data, I understand my data, and I understand my timing. Well, in particular with the 295 calls from the 6th, this thing managed to move from $200 a contract all the way to above $800 per contract. This is where these big winning percentages come into place. It's all a matter of understanding the movement, the trend. Of course, that is the direction. More importantly, what time frame are we analyzing to get this move realistically in the current structure in which Apple is position. There is no such thing as a perfect exit, especially when it comes to all-time highs. I always sell too early. No matter if I try to catch like the top, it's never the top. Some traders have different mechanisms when it comes to scaling out or ultimately taking the full exit, etc. Keep in mind, our swing trading process, we swing for a particular measured move. Once that's acquired, then we can always get back in if we see another potential entry. Some traders may sell based off of how far price accelerated away from the short-term moving averages. Some traders may use prior candles as a trail stop in particular, or you're just forced to sell because you have short dated expirations which expired today. But to each their own. The key is keep those accounts safe and protect profits while you have them. Last Finesse Friday, I said, don't be surprised if we spoke about Wix. However, Wix, we're not going to speak about. It had earnings literally this week and price gap down. Therefore, we're not in the position. Anything too close to earnings where we don't already have a profit, we are not going to enter in the position prior to the earnings. I look at earnings as a 50-50 gamble. And when we approach the stock market, we're not looking for 50-50. We're not gambling. We're using proper structure, proper risk management in order to anticipate trades and getting in high probability setups only. If you're still struggling with the swing trading process or pulling money out of the markets, if you're a brand new beginner, you can always tap in with the Profit Room. We do have a free guide that you can download that outlines our swing trading structure. If you want to take a step further and get mentored, understand the thought process, understand how we scan and find these great setups each and every week, our thought process behind it all, always tap in. My personal email, latoya@theprofitroom.com. And the question for this week, did we finesse the market or did the markets finesse us? We managed to finesse the market by simply milking our existing positions. Have a great Friday, everyone. Enjoy your weekend.